3, 2, 1, 0, and liftoff. Liftoff. Americans return to space as Discovery clears the tower.
Welcome back to TTMTrades, you all. I was going to go to sleep, but I felt so bad for not doing my top 3 for the week. Alright, we got to maintain consistency. So let's just jump right into my top 3 for the week plus 1. Alright, so first up is ticker ARDM. So as you can see, ticker ARDM has been on this dramatic, horrible downtrend, as you can see here, from 7.35 all the way down to $1.07. Alright, so this one looks bad altogether. Alright, pretty much look like we're dumpster diving now because we're at the bottom of the bottom. So why do I pick this one? Okay, so as I said, if it stays between the bottom 2 bands, it's on a complete downtrend, as you can see here. Gap down, tried to consolidate, gap down again, and now we have some strong consolidation. So we finally broke above that 1 standard deviation bottom Bollinger Band right here, which represents a 10-period moving average, and now we're consolidating in this general area. Okay, now why would we want to play this? Okay, as we can see, the current support right now, looking at this, is a $1.12. That is what's holding, as you can see here, bounce here, and now we got some consolidation with a resistance at $1.35. So we're in this channel right here, working our way for a breakout play. As you can see, the past 3 days, some slight accumulation, and then on that 3rd day, above average volume to show some interest in these price ranges and to show some strong accumulation. Now, looking at this, if we go out to the weekly, now that we see on the daily $1.12 is support, looking at the weekly, if we map out $1.12, which would be right here, that correlates, let's push it up, that would be $1.12. That correlates to old support all the way back here in May through September of 2017. Alright, so it's a strong line of support. It had that dip below it, but it immediately, the shares got accumulated and pushed it right back above at that $1.12. So looking at our risk to reward ratio, okay, we know that $1.12 is a strong line of support, and the chances of it falling below that are pretty slim to none. But can it fall below $1.12? Yes, and if it does fall below $1.12, then it puts us back in this channel down here within that 90 cent range. Okay, so we have to be mindful of that $1.12 support. Now if we go back to the daily, what is our risk to reward ratio? All right, if we know $1.12 has been holding strong since May of 2016 and we're back at that line of support, then our risk to reward is, well, you know, we break below $1.12 and then we start heading back into that bottom where 90 cents was at. Alright, so we keep a strong eye on $1.12, which should hold here pretty strong. Now we know that $1.35 is resistance. Our reward is if we break out of this $1.35, because a breakout is about to happen. As you can see, the Bollinger Bands are beginning to constrict to show that there's no longer any volatility in the stock and it's consolidating at a set range of price. That's why the bands are coming in to constrict. When there's low volatility, I always tell everybody there's a breakout bound to happen right around the corner. Now, the reward is we break out and we fill this gap at $2 right here. So you literally have about a 70 cent spread from $1.30 up to $2. Okay, that's literally a little over a 50% gain. Mind you, if you break below the $1.12, depending on where you keep your stop loss, I'm not going to tell you where to keep your stop loss at, but anywhere under that support area, then you have a low risk to a greater reward ratio. Okay, you got about a 70 cent gain you can make here for a 50 to 60% return. Now if if the trend is strong and you hit that $2 resistance to fill that gap, and then you pull back and then it continues to run up, then you have another gap here you could fill at $3.40, what kind of correlates to where your 50-period moving average is beginning to trend down there. So the risk to reward ratio, the reward greatly outweighs the risk. Oh my god, I can't talk because I'm tired. You all work with me. Now your RSI, as you can see, as I always tell you, anytime the RSI is below that 10 period moving average, then I normally stay out of a stock. So if we look in the past, it fell below that 10 period moving average here and was trending down. As you can see, the price action follows, which shows me that the bears was in control. Then it finally broke above that 10 period moving average and then began to consolidate right above it, and then it finally had to break out and continued in an uptrend, which you had this run from 334 to 735. So now looking at your RSI, as you can see, as it fell below that 10 period moving average and it stayed under that 10 period moving average, it stayed in this constant downtrend, showing that the bears have full control. Now that we've broken above that 1 standard deviation here for some consolidation, while the Bollinger Bands constrict, we actually broke above that 10 period moving average, found support, and now we're just now breaking above that 30, which the RSI is signaling that the bulls are starting to take back control of this stock in this general price range. And now we know that a breakout is right around the corner. So the risk to reward ratio, the reward greatly wins over the risk. So this is one of my top picks. Moving on. Why did that go in my breakout plays? All right, moving on. Ticker BPMX. So I kind of covered this one already in my last video, so I'm just going to do a quick analysis on this one. BPMX is pretty much forming a ascending triangle, which is a very bullish pattern. As you can see, the immediate resistance is right here at 18 cents. It is creating higher lows as it begins to trend up. As you can see, coming all the way across, the price action is following this trend line perfectly. Had that run up into that 18 cents resistance, couldn't hold above it, and then came back down, fell on that line of support, and is holding above it right now. So as you can see, we're constantly testing this 18 to 20 cent resistance. As you can see here, we're forming this ascending triangle, so which means the bulls are creating higher lows and is putting more pressure on this 18 to 20 cents resistance. So a breakout is pending, and yeah, that's the long story short of it. It has a gap it needs to fill up here at this 27 cent mark. So if you can get a possible breakout above that 18 to 20 cent mark, then we could begin heading up into that old line of support, which is now resistance right at 28 cents. So that is a great return on profit if you can get that spread from 16 to 28. All right, moving on, and ticker HEB. So ticker HEB, as you can see here had this nice breakout from 31 to 65 cent. Then it went on a downtrend and it found support right here on the 50 period moving average. Now that 50 period moving average support correlates with the RSI. Like I said, anytime it's below that 10 period moving average, I do not trade the stock because that tells me the bears are in full control. So as the momentum is below the 10 period moving average, this signals the price action constantly falling. As it found support on that 50 period moving average, the RSI flatlined out right here in that 40 to 50 period range on the RSI, which signals that the trend is still very bullish and could possibly reverse. And then we had to break out above that 10 period moving average and found support, which shows that the bears were losing control and the bulls were taking control. Then we finally had to break out here. So we are all in. This stock has great momentum behind it. As you can see, the last 3 days of accumulation, the volume has increased with each higher high. So it's looking like it wants to run from this 52 cents back into this high of 62 to 65 cents. So that'll be a quick 20% gain if you play this one just right. And then last but not least, it is earnings season, so I've been kind of staying out of stocks because I don't want to get caught up in a I don't want to get caught up in an earnings report and take a hit on my account. So looking last but not least is ticker UGAZ, UGAZ. So I'm currently in this one at $55. Now again, everyone knows this is an ETF. I already explained this one. Check out one of my old videos. This one reacts to the S&P GSCI natural gas index. It does exactly what this index does, and it mirrors it. So as you can see, it's currently at the strong line of support, and we are looking for a bounce to head back into these highs of 150 on the natural gas index. As you can see, we have a double bottom here. Knowing that UGAZ mirrors this, We have a double bottom on UGAZ here at $50 to $51, and right now we are currently at that level of support with a break above that 10-period moving average. So what we want to see is this head back into those old highs of $100 give or take and $80 give or take. All right, which this one, it gaps up a lot, as I explained in my last video, because it trades even when the markets are closed. As you can see here, February 23rd down at the bottom, the market closed on Friday, but it has traded on the 25th and 26th, which will probably cause this to gap up on open tomorrow, Monday morning. So what we're looking for is for this one to continue running up to test that 30-period moving average, which UGAZ will do the same thing, test the 30-period moving average currently at $64, and we want to look for a break above to try to head into these old areas of resistance right at that $77 to $80 range, and try to head back up to retest this high of $100. So these are my plays, top plays for the week. I'm tired. I'm about to go to sleep. So if you learned anything, please subscribe to the YouTube channel. Check out my last video I posted, keep or delete, which were all my breakout plays. And I was getting help from some of my subscribers on which ones I should keep or delete. But TTM Trades, I am going to bed till next time. See you later.
Clifton, Tranquility Base here. The Eagle has landed.